Welcome once again to Agriculture Today over the K State Radio Network. Well, grain producers out there are likely eager for something to change the bearish mood in the grain markets of late. And would it be in the form of that USDA grain supply and demand report due out within the hour? We'll ask our guest about that, Dan O'Brien, grain market economist, K State Research and Extension, as always, from his office in Colby, Northwest Kansas. So, Dan, the World Agricultural Supply and Demand estimates are due out. Before we talk of that, there was an interesting development in that the USDA's Farm Service Agency jumped the gun a bit, if it were.
Yes, if this was this was a political issue, we'd say there was a leak, but it wasn't. I don't think it's anything as nefarious as that. But estimates came out of the Farm Service Agency showing, in essence, higher corn acreage, higher soybean acreage, a little bit higher wheat acreage, coming out of the FSA numbers, which the World Ag Board then uses in their supply demand numbers. That'll be represented in the report. So unless there's some change that in those numbers that would come out, and you would think there wouldn't be that much, it looks like one half of the production equation, i.e. acres, is that we have pretty good confidence on. Maybe there might be some other small changes or something, but right now that's pretty strong. So really, if any changes happen, it would be on the yield side, and the general narrative of the market and understanding is that they're not that worried about it. It's still, though, this is the first survey that the USDA will have gone out into the fields and actually done their enumerated checks in. They didn't do that in August. And when you look at what was estimated for a yield in the August report, it was 174.6 bushels per acre. Pre-report estimates of 175.6. So that's what's on the table. And then you take the projection, and actually it came out before the USDA, the accidental leak that happened here a day or so ago, was at 14.9 billion bushels, and that was estimating 500 800 million more planted acres. Well, that number, what is that now? Is that probably closer to 15 billion bushels? So we have some vagary going on right now in terms of where these markets will go. On the soybean side, also yields projected in this report at 50.3. They were at 50 even in the August report, so not a lot of change. Again, acreage up some. So the trade was the USDA projected in August 4.339 billion bushels for this year's crop. 4.365 was the pre-report trade estimate. So a little bit of an increase, about 26 million bushels. We shall see. We'll see where all that goes. I think overall that unless when they do those state surveys, they find some type of disease pressure or some more draconian impacts in the northern states that overbalance what's been happening in the other parts of the country where we have had pretty good success, or at least decent prospects for corn. It seems that we'd be looking at numbers that are pretty strong for production for corn and for soybeans, and that markets would probably not be in for a major upside surprise, which means if all these expectations don't come about, then that's when the surprise happens. So be interesting even after that leak, that on closes here yesterday on Thursday, that D's corn closed down a quarter of a cent to 5.10. So not a lot of movement on all of that. So we still have December corn, December 2022 corn at 5.10, still above $5. November soybeans at 12.70 and a half, down 9 cents. Of course, those both are down sizably from where they were this summer and in recent, somewhat from recent weeks. So we'll see. We're coming into harvest. New crop is just about to come. And Eric, there are issues on the corners that we could talk about. There are the South American CONAB group, other groups talking about more reductions coming in their estimate of second crop corn in South America. So for what we're seeing up here, look like more acres, a little higher number. They're cutting back their corn acreage even more down there. Stat Canada came out with their wheat estimates, and most analysts are looking at that number and saying, well, headlines in the ag press, credible analysts saying they could be 15 to 20% still too high for what they have.
Yeah,
so
those numbers were panned very quickly from Stats Canada.
Yes, and there's a story on this in terms of what Stats Canada thought earlier, what USDA did in the August report, and now what's coming out now. We'll see how the USDA responds to this. When you have a shortfall like this in such major drought, that's where we're at. Hard red winter wheat futures, again with seeding just around the corner, literally. Dees wheat 682 3/4. It's interesting. We talked about it last week that the hard red winter wheat crop insurance price is like $7.12 or $7.13 per bushel. So very good price. We'll see where all of that goes. If anything would spur a few more wheat acres, it might be a weakness at this key time in feed grains and oil seeds that have come, and some strength in wheat. We'll see. The big issue on wheat is the September 30th report coming up, small grains annual summary, and that's when we have the potential to find out if there are more losses than we thought up in the northern states. Would add one more thing. It does seem that again, no surprise to ag listeners that we've had concerns about Hurricane Ida and what it had done to shipping, and we do have I guess hopeful messages coming about in terms of I guess one or two about one key export terminal open, others not far from being at the same point from either storm damage, electricity not on, and interesting just as we speak that you've got reports that Asian buyers are looking anxiously towards buying what's available from the U.S. because South America, they have problems getting they're running out of supplies on one hand, they have low rivers down the Panera River on the other, that hurts their traffic out. So in moving their crops. So anyway, the point is that I know that this pre-report estimate has come out and showed a little higher acres than before, but you look around at the South American shortfall in corn, other countries looking towards the U.S. to come in and out to buy. We got the issue up in Canada with regard to shorter wheat crop. And I guess if there's any hope, a silver lining in what comes out of reports like this is that, eager buyers would view price declines as buying opportunities. They would. And so we'll see where that goes. We'll be watching also the ending stocks numbers for both old crop for corn and soybeans, which as of August 31st came about, and then what we're anticipating for new crop ending stocks. And it does look like there's a estimate or the idea that we'll be gaining about 40 some million bushels on old crop corn up to 1.159, still tight ending stocks, a range of 1.091 billion up to 1.2. And for soybeans, USDA estimated about 160 million bushels in the August report for ending stocks for the old crop marketing year, 168 for soybeans in the new, and really when you look at what the anticipation is for the next year, and that's really maybe the key going forward for anybody that will be facing a storage versus sale decision with new crop coming on, et cetera. You've only got corn ending stocks projected right now by the market to increase from 1.159 billion bushels in this old crop marketing year up to 1.341. That's still not 1.5 or 1.8 or 2. You're showing a moderate improvement, and that's with hurricane issues that have come in, and other maladies kind of gumming up the works in logistics. So so anyway, interesting. And on the soybean side, 168 ending stocks for old crop marketing year, with all that's happening in the world, et cetera. Well, we're tepidly saying, well, we'll get up to 182. So so really going forward, we're not counting on a great big huge recovery yet. That happened in 2002 that dramatically changed where these markets are at. If that's the case, weather risk, you name it, all come into play. Throw in La Nina rattling its saber down South America, affecting their crops, and could come and affect us. Then you've just got ongoing risks that are likely to give us some pricing opportunities beyond harvest here at the end of this year and on into the next.
So that really is the message you'd like to part with. Producers need not get antsy at this point, even as they see the markets drift lower in recent days.
That's the message for producers, and I think there's a question for buyers. We've come through a marketing year where we've been really tight, just hoping to get to this point where, gosh, maybe we'll have good crops this year, and it does seem like we'll have at least decent crops in the U.S. And how will potential buyers respond to lower prices now after they came through a period for about 8-9 months where it was really touch and go as to what they'd have. So I guess to the degree that prices go lower, I'm wondering about how buyers will respond, and as they try to secure prices to not find themselves in the same situation next year as they were this year.
Right. Lots to consider, to say the very least. Looking forward to what the USDA shares in that WASDE report. Again, that's at 11 o'clock this morning, Central Time. We'll be watching for that, talking about it with Dan next week as well. In the meantime, check out his notes on the markets, which are available to you now at agmanager.info. And Dan, we appreciate the word. Talk to you again next week. Many thanks.
Thank you, Eric. Take care.
Dan O'Brien is along with us each Friday to get into the grain market factors of interest. He is a grain market economist, K-State Research and Extension, based in Colby, Northwest Kansas. We'll return with more for you after this break. You're tuned to the K-State Radio Network and Agriculture Today.